We now have the second panel discussion for the day, and I'd like to ask to enter the stage Boel Swartling, entrepreneur and investor in the green tech sector. Please step up on stage. We have Marcus Hökfelt, fund manager. Go wait for the applause. Marcus Hökfelt, fund manager of Almi Invest, a green tech fund at Almi Invest. And we also have Ingmar Rentzhog, founder of We Don't Have Time, the world's largest social media platform for climate action. And we have with us Christopher Engman, CRO, CMO of Proof Analytics. Now you can clap your hands. What we see all over the world now is a great shift in this focus towards renewables, of course. And the necessary change in this global mix towards renewable energy is supported a lot by relevant indexes. One is the UNPRI, the Principles for Sustainable Development, and all the companies that have been presenting here today, of course, adhere to these standards and hold them highly. And most of the large companies, of course, and institutions are signing up to those principles. So let's talk a little bit about this field more in depth. Which would you see is the strongest driving force for investors to accelerate and fund managers to accelerate this development in putting money into this field? Would you like to start?
Well, I think the good thing with sustainable investments at the moment is that I think it will be less hurted by, for example, Corona. There is one observation is that there's a tremendous amount of capital available for sustainability tech companies. And so I kind of like to invest in stuff that is doing good for the world, but also has a strong macro trend. And this macro trend is not going to change overnight. So we'll see a 20, 30-year transition that will be tremendously large. So I think there'll be some dot-com cases because of the amount of capital available. As probably a hint to people in the audience, there's an overflow of capital a bit high up. There's too little on the kind of angel side. So I think that some of the bigger funds need to go down one level because there'll be overvaluation on the cases that are proven and undervaluations on the semi-proven cases.
Boel, yes, please.
I tend to agree, particularly when you talk about the lack of risk capital, and I see that quite clearly actually when you look at investment spans with companies raising between just €1 million and I would say 7 to 8 million euro. There's really a lack of funds investing early stage. And that is actually hampering the growth of a lot of, in particular, I would say, industrial innovation companies.
They're very capital intensive.
Yeah, definitely. But I was also thinking when you talked about why capital actually should move into green investments. I used to work for MTV and and I actually founded a research center within MTV as well, where we looked at youth trends, and we were in particular studying Generation X and millennials. How they engaged and how they wanted to engage. And one thing that we saw very clearly was that they moved out of political organizations and big organizations and rather wanted to change society by the way they consumed or the way that they invested or by sending emails or, more on a personal activism kind of level. And that actually relates to why you should move into green investment, because looking at the millennial generation, they are taking a very, very clear stance in terms of how they consume.
Very value-driven.
Oh, very value-driven and also very activist-driven in the way that they choose to consume and invest. So talking about large trends and where consumer demand is actually moving, it's moving very strongly into green consumption and green investment. So, and that is actually the foundation for the megatrend that Christopher is talking about.
Thank you, Boel.
Yeah, no, adding on to what Christopher also said and what you're talking about, I think that there is an oversupply of looking just today of capital that goes into quite risk-averse green investment, like green bonds. Vattenfall today announced, or yesterday, announced that they had a green bond of 500 million euro. It was oversubscribed by 6 times. That to me is an indication of that there is lots of money out there that is not working right now into green investments, but they want to do it. But somehow this needs to trickle down into more risk-taking investment, and that's what's the gap that you're after. And part of, I think, where we're looking as Alma Invest, as a green tech fund, we try to bridge that gap and get the investors that sort of in the middle early stage VC sort of to go in and take the risk still. Because we need more technologies that goes into green bonds later if we want to make this transition happen and really make a success out of the climate crisis.
Yeah, and a bit of the trick there is that a lot of sustainability tech is pretty capital intensive, so angel investors are typically not enough. They can be a small injection in the start, but you quickly need to go into bigger tickets. And that's where I think we all agree there's a bit of a gap there. Especially hardware development is expensive.
But also coming back to, you said in the framing of the question was that why should sort of investors look more into this area? And I think that you start to see the end of the cycle where you start to see risk exposure on your assets.
I was just going into the stranded asset question here.
Because you will obviously get there sometime, and maybe that is the small weak signal that you're starting to see in the market right now.
But also don't underestimate also the regular pressure, because regulations are moving more and more in favor of the sector. I'm just thinking, my company is within e-mobility, a company that makes EV charging equipment solutions, and just looking at the regulatory pressure there on the car industry now with the CO2 taxes starting to really affect the big car manufacturers, also the clean zones in the cities, and the whole, I would say, support structure to move transportation into green transportation is creating a massive pressure into green assets. So I would say that the regulatory part, also with the EU and EU legislation, is pointing so much in favor of the green sector that, I mean, there's basically nowhere else to go. I think one problem is very much what Christopher and Marcus are talking about, which is we need to find the right vehicles as well. Because, as you say, when the green bonds are heavily oversubscribed, it also means that money has nowhere to go, right? No, not in terms of where you find the right risk-reward level. So we need also a lot of financial innovation in order to address the oversupply of capital.
Ingmar, Rentzhog, do we need to talk more about stranded assets than we are currently?
I think that what we see now, right now, happening with the oil price, etc., is that Corona is the trigger of something much more deeper, and that's actually something good, because what everyone knows that are into the energy field but try to not talk about is that if we're unable to succeed with the Paris Agreement, 8% of the world's fossil fuel, coal, oil and gas, is stranded, is worthless.
You cannot utilize it, it has to stay in the ground.
80%.
It's zero.
And that's a finance bubble. And now we see that the worlds are not so dependent on oil as we used to. And I think investors are going to look after this next risk. And I think we already have seen this started before Corona. And Corona is just something that is going to accelerate that. So investors hate risk, but they will also say they love opportunity. And if you see the opportunity of renewables and all the companies that have presented here, there is the growth. And what is also, I think is really important to see here is that it's not just about green tech versus oil tech or something like that. This is much more deeper than that. We're going to see the whole society transform to work to solve the climate crisis. We see now that the world is coming together to act on the corona crisis. So the world can act if we will, and believe me, we must act on the climate crisis, because that's way bigger than corona. And when the world realize that has already started, we're going to see that companies that are not switching to work for being the solutions, they will have a really hard time to attract employees. On the other hand, companies that are starting to transform themselves, they will have a really easy time to attract talented employees. And it's very hard to run a business without talented employees.
Thank you. Christopher?
Yeah, I think we see one thing already, which is the cost of capital for brown, or whatever you want to call it, investments is increasing fast. I just saw a case in Canada, a huge case in the oil sands, that they had to cancel because the cost of capital just increased all the time. Less and less investors want to be in, there's too high a risk, and therefore the interest rate goes through the roof. We'll also see a few cases pretty soon that will have a balance sheet bankruptcy because of this, once the stranded assets are realized as more and more worthless, like Shell and BP and those, they have tremendous balance sheets connected to oil findings. Soon have cases that actually drop dead, not because of liquidity, but because of a balance sheet bankruptcy. And so what will happen in the coming few years is that the speed of change will increase dramatically, I think, because of those two factors.
I'd like to just comment on what Boel said previously. It's also the financial risk modeling, business development we need to do, and probably many of us calculate risk in the wrong way. I mean, if you would have gone to a banker a few months ago saying that you would like to lease airplanes, I guess that would have been a quite safe bet. You would know your risk level, etc. And then Corona hits you, and all of a sudden it's not so fancy to be financing jets or airplanes anymore. It's extremely volatile right now because nobody's flying, of course. And we see some of these green new investments are treated as they are extremely risky. But I would say on the long term, they're probably not very risky.
No, exactly.
It's the contrary.
Risk.
No, actually, I worked a lot in direct investment and with a lot of newly started companies and a capital market day where we really try to market these companies. And I've noticed just over the past 2 years, there's been a huge change in the perception of the green tech sector, because 2 to 3 years ago, the green tech sector was still associated with a lot of the bankruptcies that happened in the wake of 2008, 2009, where risk capital actually ran dry and a lot of early green tech companies went bankrupt because of lack of financing, but also, I would say, because the market wasn't really there. So right ideas, wrong timing. I'd say that during my capital market day this year, which took place a few weeks ago just, I had absolutely zero sentiment of that bad reputation hanging around. And I think that's very much based on the fact that consumer demand is there this time. There is a real market for these products and services, in difference from what was the case actually 10 years ago. So, and I think that's very, very promising. But I also see the huge gap between how to finance innovation and where the big bulk of money is actually going. And we need more, we need these companies to grow so that there are more green companies to invest in. Because if you look at where ESG investment is going, it's 92-93% is going towards very traditional SDG compliant companies. And already 40% of the world's assets are SDG invested. I mean, let's not forget that the needle has actually moved, and it has moved quite a lot. But we need to find the really green funds and the really green companies that are working with green innovation and green solutions, and they need more capital to grow faster. I think that is, and the right instruments to address that. ETFs are coming as a very targeted and effective investment vehicle more and more. And I think that that's the kind of financial innovation that we need to see in order to provide alternatives. But we also need more VC funds that are more targeted towards green tech and particularly industrial investments, because if we are going to change infrastructure totally and turning infrastructure green, that is going to require a lot of innovation and a lot of industrial investment.
Thank you, Boel. Christopher.
So if I put saving the world completely to the side, the reason why I invest in companies that are slightly below the big tickets is that it's just because of that once you reach a certain threshold, there's an immense amount of capital. So you can have pretty severe bumps in multiples if you come in at in the right companies, in the right timing, and enough of them, so you need to have a portfolio. But then there's such an oversupply of capital one floor up that once you pass the threshold, you can all of a sudden have hundreds of millions coming in investments and billions sometimes, like we did with Kleinman, for example, and I'm involved in pumped hydro that will soon speak here after, and then cases like that where as soon as you pass a threshold, then all of a sudden money is floating around you.
It's a pleasant problem. Yeah?
Sorry?
That's a pleasant problem.
Yeah, but that's kind of egoistically my play.
How about green funds? How would you say that the green funds have been performing compared to regular funds?
Well, it depends on where you look and who you talk to. I mean,
I'd like your opinion.
yeah.
Ingmar?
I think there's no future for green funds, actually. And that's not because I'm pessimistic, that's because I'm the opposite. I mean, everything needs to turn green in one way or another.
So the niche product, if you can call it a green fund a niche product, they're sort of obsolete.
Yeah, I think so, because I think that if we invest in companies that have a good purpose, we will have maximized profit. So you need to look for purpose and profit, and you will find profit. And if you know that, why should you invest in a green fund? Every fund should need to do this, and I think we're going there. But of course, we're going to have like a renewables fund or like early stage fund or something like that. But the green fund or the green bonds, I don't think.
Green is a generic.
Green is everything.
I agree with Ingmar and BlackRock.
Basic.
Christopher.
Sorry. What I agree with Ingmar. What BlackRock and Goldman Sachs and a few others now are doing is great. I mean, they just stop investing in companies that are not playing the right game, and then the cost of capital again for bad companies will just kill them, or they have to change. So money talks in this, especially for the companies that are not, as you said, Ingmar, not 100% green. They're normal companies, but they have to be green as well.
Boel and then Inga.
Actually, I'd say if you look at how the SDG investments are actually invested, there's only 6 to 8% of the total SDG compliant capital invested, which is invested in what you call really green funds. And mainly, the 94 to 92%, the rest, is invested in quite passive SDG compliance, not so active, which basically means that it's risk management or averting different kind of phenomena rather than supporting or actively driving a green agenda. So I would disagree a little bit, saying that green funds actually play an important role in accelerating the green agenda. And then when we look at SDG compliance, we need to look much more at how actively the fund managers are driving the SDG compliance towards change and making a positive stamp rather than just avoiding a risk.
Another perspective. Marcus, please.
I think that green has a certain value still to play for a while, because if you look at, I mean, taking Sweden as example, you see some funds being on the later stage investments, but typically the money in the green area still flows in the direction we're already doing, and nothing really innovative is going to, or not a lot of money is going to the innovative side. And you would see this, if you take the state example, you have Almi Invest as a direct investor. We have the mandate to take risk, and we do, I hope we do. If you take many of the others, and also the Sam Invest, which is a fund of fund, still when they do that, and they should make more green investments, they are sort of typically still doing more of the software side. And I understand it, because if you leave to a fund manager to maximize the profit right now, and you compare, do you want to invest in a software which is fast to, the time cycles and repetitive cycles are very fast. If something fails, it takes 3 months to fix it. Or do I want to invest in something that could have a big potential, make a big industrial company in a couple of years? But if it fails right now, it takes 3 years to get the next product out to the market. And if you don't have sort of certain allocation of money with risk and really have the mentality to take risk, I think that shift is very tricky to do.
Ingmar, you wanted to add something?
I think we need more impact investment that are like building from scratch. We're not buying this on the market bonds, but directly into new companies that are changing the world. And that kind of green fund or impact fund we don't have today, but I would really like to see it in the future, because that's what we need.
Even stronger commitment, even stronger ambitions.
So I agree with we need more active investors that are willing to take in risk for the opportunity, not just avoid risk. And I also think that index fund is something that maybe we're not going to see as much in the future, because if you invest in an index, you invest in the business as usual system, and that's really dangerous.
I have one final question for all of you, then we need to let the next speaker up on stage. If you'd like to start, Christopher, your outlook on the market within renewable investments, just a few words, sentences. What are you forecasting?
Well, I think, again, very favorable to go into companies that are semi-proven.
Semi-proven.
Semi-proven. Because there's such a surplus of capital in the proven cases. And when you go in at the right timing on the semi-proven case, you get an incredible multiple. I mean, Klima, for example, went from 0 to several billions in a few years. Just when you start to pass those thresholds, your shares are just kicking. I think another thing is that most sustainability tech companies are very engineering focused. There's a weaker commercial layer on how to do business, basically. And this is typical for any new sector. I mean, new, it's been around for a while, but it's still relatively new, that the tech is the core, and doing business is something you're like, oh shit, we need to figure out how to do business. So I see pretty weak layers on the commercial side in sustainability tech companies. Typically pretty good tech, especially in Sweden. But overall, very positive. Yeah, and again, don't throw in money when all is proven, because that's just overpriced.
Thank you. Ingmar.
I think the future is renewable, and that we're only going to see things speed up. And I also agree that we need more businesses, more people with good at commercial bit of the technology. But one area I see a really great potential is actually storage. Because if we're going to
energy storage,
because that's what we need if we don't want to depend on nuclear or fossil fuel. And I think that we're going to see a huge potential of growth there.
Thank you. Boel?
I will home in a little bit on the market development, because I'm part of measuring direct investments into risk or actually venture capital, basically going into renewable companies. And looking at 2018, it was a very good year, and investments have increased for over 30% year on year the past 3 years, and we're just getting the numbers for 2019 for Sweden, I'm talking, and it's going to be another record year. We had a lot of really big investments going on in the beginning, first half of 2019. So 2019 it will be a total record year ever for direct investment in the Swedish green tech companies. 2020 with the corona crisis will of course be a question mark. Then on the other side, there's a lot of innovation going on the investment side. Very much looking forward to that, seeing what's happening with blockchain moving into the green field and how to measure and evaluate green investments. And I know that there are a lot of financial institutions working a lot on financial innovation and trying to find those vehicles in order to channel money to a greater extent and with the right risk-reward balance to their customers. So with a dip for 2020, for what we're going through right now, I think the future for green investment looks marvelous. It's a big mega trend. We all need, we know and we understand that we need to convert everything to a green economy. And unless we do that, it will be a very tough world for our children. So getting everything green is as big as digitalization. It's going to go on for 20, 30 years. It's a mega trend. So yeah, I think it's going to continue.
Thank you. Marcus.
Yeah, I'm very bullish in general about a quite simple business model is handling waste. I mean, if there is something we've been doing good for the last 30 years or 50 years, it's creating waste, right? And now we see a lot of businesses that can create circular business flows and business models. So in general, taking somebody that somebody else is willing to pay you for as waste, treating that and then selling it to someone else, that's a good business model, and we see a lot of that. So we're scouting that, and we will see lots of that the next 10 years, I'm positive about.
Well, thank you very much for your very valuable input. Thank you.
Thank you.